And Anil Rego joins us right now, founder and CEO of Right Horizons. Anil, good morning. I'm not going to get so much into what is the right price for a JP Associates or what's the right price for a GMR or IVRCL. I want to ask you a more fundamental question. 3 to 4 years ago, many of these infrastructure companies got valuations that were not based on their execution, but based on the dreams of what they will do. Then, of course, a realization has dawned, at least on the institutional investors right now, that there is no scarcity premium. There are enough companies. By and large, this is a construction business, and so maybe it should be valued like a construction business. Do you think, Anil, that some of these stocks are permanently gone into a different stock price range than what investors are still expecting, which is prices of 2007 and 2008, which may perhaps never come back, which means nothing's wrong with these companies, except how we look at them is completely different than how we looked at them 3 years ago.
Sure, I completely agree with you. There's a fundamental shift in the way we've looked at some of these stocks, and also I think what has been spooking the markets is the interest rates, the cost of financing, etc. In some of the larger projects. Many of these companies, if they have to grow, they will not be able to do it on their own. They need to borrow significantly there. The good part for them is that infrastructure is still getting funding from banks. When we looked at the bank numbers, interestingly, real estate is completely down, but infrastructure is still there. So they are getting the funds there. But I would rather look at companies where they are closer to a completion phase. They have toll revenues beginning to come in. So even if I were to look at the whole range, I would probably not look at a JP Associates. Yes, the whole sector is completely battered there. But if I were to pick, maybe I'll pick something like an IRB where at least they've completed projects, the toll revenues, a lot of them bunching in together, and over a period of time you'll find them at very compelling valuations there. And I think institutions will come back to stories like that. But definitely, I would stay out of stocks like JP at this point.
Let me take that point up with Anil as well. Anil, India's story, and there are enough representations that that have been discussed, that fund managers have spoken about, whether it's a pizza company. We saw what happened to Tata Coffee post the Starbucks deal. So, to what extent should one be trying to get into these India stories? I mean, it could be a Titan, it was a Gitanjali Gems at one point in time, all India urban consumption stories.
See, I would probably get back to the basics if you ask me. Yes, the whole growth story at a time like this, when you're looking at market below the 200-day moving average, which is pointing out to probably a longer-term decline. Okay, so I would probably stay out of a lot of these growth-related stories there, and at times like these, go back to the basics. Look at stocks which are already delivering profits. I think look at what are the cash flows like, what are the downsides. I think how much of loans they have on their books. All of these are very much appreciated in uncertainty there. So I would even again rather than a Voltas, I would probably see what are the companies where in the long term there are also triggers. So maybe I would look at an L&T, totally battered down, but at some price point, you would find that the sum of parts and the business that it has, and probably somewhere over the next 5 year, 10 year, they are going to unlock many of their subsidiaries there, and focus on names like that, focus on much larger companies, because at points like this you would rather be a little cautious. And so I would play for cash flow stories. There are a lot of companies which have good cash flows, which have good profitability, which have fallen down. And I would prefer maybe moving into some of those, keeping the growth story for a bull market. Okay, those may suddenly outperform at those stages of the market, but at this time just sit back and be a little cautious, go back to basics.
I want to give you a very simple example. Some of you who are over 40, you may be able to figure this out. You remember there used to be a watch called HMT? It used to come in ration. You could sell it in the market for double the price. Bajaj used to make a scooter called Chetak. You could sell it for double the price. There used to be a car called Premier Padmini. You could sell it for double the price the next day. You had an Ambassador. You could sell it for double the price. You had a company called Videsh Sanchar Nigam Limited, which used to charge some ridiculous $98 to make a call to the US. You could do whatever you wanted. Please tell me, Surbhi, were they making more money then when India was not growing to when can they make money? Now they're sinking in the pits. दो पैसे को देने को तैयार नहीं है for a phone call. But, oh, the stock should do well because India is growing. I mean, come on. You know, because India is growing, everybody loves it. When everybody loves it, it's difficult to make money. That's why your stocks are getting adjusted. That's why you must look at 4,800, not at 5,400.
Anil, okay, so you gave us one example in the form of L&T. What's your best bet? If someone wants to be an optimist, wants to be in this market for at least the next 2 years, is not going to budge, whether it's 4,800 or 5,400 or 6,100, what is that one consumption stock that you need to have in your portfolio to play the India consumption story?
No, I think, at this point probably I'll stay away from the consumption story. I would still want to, see some bit of momentum come back. Okay, then I would want to see markets, recover a bit, because I think a lot of the consumption stories are ones which are of the future. Okay, so again, one may want to see how they do that, and maybe in a bull market, you could look at it. I would, at this point of time, considering the construct of the market, look for lower risk type of sectors there, and maybe look at sectors like pharma, for example. Look at sectors like IT. Again, IT maybe I would be a little cautious there because they've already run up in a significant way. But some of the good strong names of the pharma have shown decent momentum. So at this point, I am not so much into the consumption theme at this point.
Anil, a quick question before we run into the break. While that is the case, there are some sectors where this is not a commoditized business, and if you find leaders in a non-commoditized business, do you think it is worth now sticking to those leaders? And I'll take a couple of examples and perhaps you can shed some light on what you think. Let's say an Infosys. I mean, even if India grows, you cannot become an Infosys. It's there, that's it. Bharti. I mean, you cannot become another Bharti. It's impossible now. Or let's take the example of some of companies like this. Let's say a BHEL. But, guys who are already so way ahead that either it requires billions of dollars to get there, or even if the market picks up, you cannot replicate it. Is that the way now to look at the market rather than saying, oh, I'll buy this Reliance Com because it's so cheap from the market leader?
Sure. No, I completely agree with you. In fact, at times when markets are volatile, at times when there's investors see risk, I think the best thing is to stick with the large names, stick with stable stories. So all of them, like the example that you gave, Arcom, I'll probably stay out of Arcom. I may go into Reliance, okay, because they have to replicate that and build it up will be so much difficult there. So definitely, and what we will also see is that like what we saw at the initial part of the bull market rally, again you will find that these names will first perform, so you would actually have time then to move on into your other growth stories. So just be a little cautious, change your portfolio mix of stocks into larger caps, stable long-term stories, and I think at this point be very well diversified.
All right, quick break. There is absolutely nothing happening in the market.
Goodbye.
Thank you, Prakash.
Oh, sorry, Prakash. Thank you. I forgot to do that. Right? Please, let's show Prakash at least. Yeah. Thank you, Prakash.
Thanks,
Appreciate it.
Prakash.
Let's go.